financial literacy, and the human condition. Welcome to Financial Fitness with the Money Doctor, Dr. Francis Rayam.
Hi, it's Francis. I just wanted to take a minute to thank you for watching this video. If you're catching us on YouTube, please help us help others by clicking like, subscribe, and all notifications so you don't miss any videos. And check back for the next video. I think you're going to love it. Thanks again. For more information, you can visit us at hugyourmoney.com.
Welcome to Financial Fitness. I'm Jess Tyler along with the Money Doctor, Dr. Francis Rayam. Hi.
Hi, Jess. How are you?
I'm doing good. What is our big topic today?
Well, I'm going to say it's financial wellness, but I want to talk about employers. And first, I just want to nail down that term, financial wellness. Okay. For one thing, if you know me, you can hear my voice. I'm fighting a throat thing. So when I'm talking about wellness, I know of what I speak at the moment. But financial wellness is a term that gets sort of bandied around like financial planner. And there's all these generic terms that come out. And I think, I guess the downside of this is that people use them as tools to sell products and make money. And they say, hey, guess what? I'm going to help you get financially well, when really what they're doing is selling you an insurance product or an investment vehicle. And there's nothing wrong with that. That's part of financial wellness, is having those things in place. What I'm disagreeing with is the idea that it doesn't include, in most cases, things like actual budgeting. You know, here's an app, put your information in, is not the kind of help people need. They really need help, in my experience, with financial literacy and financial wellness as a package. So what's missing in these kinds of programs, most of them don't include any sort of real debt management. And if they do, they include like credit card stuff. You know, we've been over this many, many times. It's why we're patented, right? But what they're missing is the person, the human that helps you to be financially well, right?
So it sounds like it's a Band-Aid and not fixing the actual problem.
Well, it's a start. It's a start, what we've got. We have about twice as many companies now offering some sort of financial wellness package as part of their employer benefits, or employee benefits, excuse me.
So, do any include goats walking over your money? Like yoga? No?
Maybe, you know, yeah, maybe a little acupuncture on your dollar bills.
Right.
But so about in 2015, according to Bank of America, we only had about 23 or 24% of the companies offering financial wellness benefits as part of your employee benefit plan. And today they say there's about 53%. Now, that was a survey that was done over 800 employers, and 1,000 employees.
What does that mean exactly? Like, how do you know if you have financial wellness with your employer? Is it like a program? Is it a person? What is it?
Really good question, because you know what? It's whatever they decide to label it as right now. Some places say, look, we're going to give you financial wellness benefits. And it turns out to be something about retirement planning, or it turns out to be something about health insurance, but it may not be a full, well-rounded package. So your question is, how do you know if you have it? And the first thing is to ask your HR people, hey, does our company offer a financial wellness package? And then find out what it is. It seems to me that it either goes one way or the other. They've either thrown everything into there that they can think of, which is such a labyrinth of information that employees just look at it, freeze up, and don't find their way through it, right? Or it's stripped down and it really handles just whatever the agent or broker who sold them that package wanted it to handle. The reason for this, Jess, as you can imagine, is the heavy lifting isn't in selling you a life insurance policy or an annuity or a mutual fund. The heavy lifting in financial wellness is the educational piece. It's working with a person to figure out one-on-one or couple to one, you know, or whatever, where your illness is, essentially.
And is that a continuous thing or a one-time thing?
It
could be either.
Yeah, it's a continuous thing, but in my experience, it's on a curve, right? So initially, you need a lot of care, right? Somebody has to help identify what your problems are, give you the coaching and the tools that you need to start to sort through those problems, and help you take them one at a time, and give you the nudges that you need, the gentle nudge, like, hey, Jess, you said that you were going to enter that information into our system. It's been 2 weeks. You asked me to follow up with you in a week. I'm not trying to nag you, but you asked me to help you. Tell me when is a good time for you to get this done. I understand life events happen. Maybe you want to push this out a month, but let me know so that we can help keep you on track and get you to your
Okay.
goal. That is not ever going to be, well, I shouldn't say not ever with AI, who knows these days, but I don't think that's really very realistic in the immediate future to expect from some sort of software that lives in your HR portal that you're supposed to figure out on your own. Okay.
Right.
So if you need that human resource to diagnose your financial illness, as it were, a lot of metaphors here, but if you need that, then there's no replacement for a knowledgeable human, not somebody who, if they sold a certain amount of product, qualifies to be a coach. What is that? And I see that in these plans. Well, if you sell enough product, you're going to get to call yourself a coach. Right. So you can sell more product under a different guise. As I said, the heavy lifting really is about, the budget, the debt management, the way you talk to your partner about debt or about money. How do you speak with your children? How do your kids take care of you if there's a long-term illness? Any of the things that really are obstacles for people, but that every company on the planet isn't in the game for. They're not
Right.
in the game because it's the hard way to do it, right? But it's the important way to do it. What good does it do to sell people more products that they maybe can or can't afford without knowing they can or can't afford them? And I mean, I've been doing this for a long time now. Let's see, 37, 38 years, something like that. And every form I've seen from insurance companies that is supposed to be a fact finder, right, or investment companies, they ask a lot of questions, a lot of really important questions, but they ask things that bring you to a certain point, whether it's good or bad, whether they're trying to rule you out, like this product isn't appropriate for you, or they're trying to get you in, this is the best product for you. They do it by means of deduction. And those questions sound a lot like this, Jess. They sound a lot like, tell me how much you spend monthly. And they rely on your data to get it. But there's no tool necessarily to figure that out. And
So you're
so,
just kind of guesstimating.
yeah, most of the time, or you're using an app that, puts things together and doesn't necessarily sort them through. Computers are great. They speed our processes up. AI is doing a lot of the intake that humans used to do already. I'm not sure I love that because we'll lose jobs, right? But it can do some of the heavy lifting like that. But it isn't a human. And I
Right.
hope it's never a human. I hope that we never get rid of the need for actual people who listen and ask questions and help you through the process. So the reason I'm talking about this with employers is if only 53% of the employers in the country are offering some sort of wellness package, and if most of those packages seem to be falling short of the mark as statistics and just conversation with people tell us, they either don't know whether the company has an employee package or not, or they can't understand it when they get there, or it isn't useful to them, right? If that's the case, then that means there's still 47%, roughly half of the companies that are not addressing this.
Is this a recent thing though? Because I can't think of a job that ever, when I was sitting down as part of the interview or when I got my new employee information, that I saw something that said financial wellness package. I don't remember ever getting that.
That's right. That's right. Because it's I wouldn't say a loss leader because they would tell you up front, hey, we're going to give you this package. It's more of a warm and fuzzy when somebody asks about it. So
Okay.
it's not new. That survey that Bank of America did compared the number of companies from 2015 to
Okay.
today.
So it's been
That's
around.
9 years ago. And that's
Yeah.
about the time, if you recall, we started financial fitness. We started using that term financial fitness and financial coaching. And I'm not going to say people heard us and picked it up, right? But we were on the cutting edge of that because we thought it was descriptive. But by the
Right.
time everybody says they're a financial coach and there's no way to know what they know or don't know, you really have to be your own best advocate to understand what that person can do for you. So no, it's not new, but in terms of not ever sitting down for a job, and I think it's fair to say, because you've said it on the show, in radio, there's a lot of changeover, and you've stayed continuously employed, but you've moved from station to station, and every time you get a new package, right? And
Yeah.
is financial wellness in there? No. In fact, one of the reasons I'm talking about it is that companies are constantly complaining that they are pressed to pay you more money, not you personally, but to pay employees more money, because employees are saying, look, the cost of living has gone up. I can't pay my bills. I just bought a car. I just bought a house, whatever. And they're expecting their salary to cover that. And so
Right.
employers are constantly getting bombarded with those questions like, how can I get more money from you? How can you give me more value by employing me? And if you cannot, I'm going to seek other employment. I'm going to go somewhere
Right.
else.
Yeah.
In fact, there's an estimate, I think it was Salary Finance, Americans by Salary Finance. Salary Finance did a survey, and they estimate that $500 billion are being lost annually by companies to employees who are under stress, not showing up for work. Presenteeism, where presenteeism is where you are at work, but your mind is somewhere else, right?
Right.
Your
Yeah.
body is there, but your mind is on I got a creditor calling me. What am I going to do about that?
There's a
So
whole show on this called Severance. Have you seen that?
no, I
It's
haven't.
kind of like that. It's somehow they manage to separate you. So when you're at work, you can't think about home. When you're at home, you can't think about work. It's a cool show.
Well,
That
that's
totally that
interesting.
idea. Yeah.
That's interesting. We started talking about that with cell phones alone, right? How many interruptions do you get from your cell phone, and how many employers were requiring that they were off during
Right.
your work? And then there was a whole personal thing about that. Who knows where that was
Quick
headed?
question for you before quick question before you had to break. Is this something like short-term disability where if your company offers it, you can opt in, but you have to pay for it? Or is this just like a warm and fuzzy benefit they're giving you?
It
Or is
could
it
be.
different in each?
It could be either.
Okay.
I would vote for it to be, a free benefit because it's so valuable. And we should talk about the value and things when we come back from break. But yeah, it could be either. Some employers will pick up part of the cost, some will pick up all of the costs, some will say, look, it's available if you want to pay for it.
And do you think if it is available, it's worth doing it? Or is that case by case basis?
It depends on the financial wellness package. I mean, is it worth paying for it? Even short-term disability, we say that. So you have
Mhm.
short-term disability. Do you really know what you're paying for? Is it, hey, I have to lose an eye, an arm, a leg to be covered, or is it I have to be able to just not do my own job for
Mhm.
a period of time? I mean, know what you're paying for, and in financial wellness, it's new enough that it's being sold as a package. Companies are making money on it, but I'm not sure the end users are getting the benefit from it, and therefore the
Right.
employers aren't getting the benefit from it.
All right. We'll have more on this coming up, but first I want to get your phone number.
Sure, it's 413-773-3333.
Or you can go to hugyourmoney.com. We'll be right back with part 2 of Financial Fitness with the Money Doctor, Dr. Francis Ram on WHMP.
Financial Fitness with the Money Doctor is sponsored by Hug Your Money. So unique, it's patented. Financial coaching and more information at hugyourmoney.com.
Welcome back to Financial Fitness. I'm Jess Tyler, along with the Money Doctor, Dr. Francis Ram. Hi.
I'm still here, Jess.
I know, and
Still here.
I'm finding this topic interesting because I really have never heard of this from an employer before today.
Really?
Yeah, I mean, 401k, obviously, and maybe there's an HR person you can call if you need help on something, but not an actual financial wellness package.
Well, that's fascinating because, as you know, I do some segments on other radio stations, and one of the DJs had no idea what I was talking about either. And the other DJ said, maybe we have it and I just haven't heard about it. Maybe I should go look, how do I find out?
Right.
Um, that's really powerful. You work for a large corporation. I mean, you're in
Mhm.
a smallish radio station, but you work for a very large corporation.
Right.
So this is a good time for me, and we should remind people about this at the end, but this is the right time for me to say, if you're an employee or an employer and you're
Mhm.
listening to this show, contact me, because really we could give you and your employees, great access to the real benefits that they need to help limit the absenteeism, the presenteeism, right? But you're at work, but your mind is somewhere else, or the stress level that your employees are under. And this
Right.
is perceived as a very, very valuable, as you can imagine, right? It's a very valuable benefit, not just to say, hey, look, you got this warm and fuzzy financial wellness package, but it's quantifiable with us. I mean, the moment they fill out that form and they click submit, it shows them this is how much money you're going to save doing this
Mhm.
without spending any extra money monthly. So for a small fee, the employers could probably all afford to pick this up. It's a small fee. Or even people would pay for it because, I mean, they're paying for it now when they're not in an employer plan, right? But for a small fee, they could have access to real coaching, group meetings, really keeping people on track. And the things that the employers get out of it are huge. Because first of all, an employee that doesn't need to ask you for more money all the time because they can't afford to pay their bills
Mhm.
is is valuable, right? Just that alone. Or that you give a raise to, but that raise goes like directly into their retirement account because the rest of their stuff has been handled. Their budget is in check and their bills are on track. And so now they see the real value in that. Try
Mhm.
and pull an employee away from a company that is helping them fix their lives financially by doing something more than just saying, here's some more money.
Right.
Because the problem isn't the amount of money that people have. Of course, that's a problem, right? You might not have enough money, but why don't you have enough money?
Mhm.
Because the symptoms of that are eating you alive, right? The fact that you've been approved for loans or that you've had life events happen that are expensive or that now your kids are college age or that you're caring for an ill parent, those kinds of things are sucking up your income. And if you
Mhm.
think that the only route or the best route is to go to your employer and say, I need more from you, there is a point where the employer cannot give more or doesn't want to give more. And we see this in turnover, Jess, because they fire experienced people, right? They find a way to get the experienced people to leave and they hire somebody new at a lower
For a
income.
lot less money. Yeah. I see it all the time.
Yeah, and I would prefer that we are valuing experience and that we are
Mhm.
caring for the new people that come in and that we're getting them on the right track financially because after all, the job is just the income part. It isn't any of the rest of the life financial markers, right? So a company that actually would bother to do this should really impress their employees.
Well,
But
and in addition to what you said in the first half was it's a $500 billion loss because they're not addressing this stuff.
yeah, yeah. I mean, we don't have to tell employers that they must know how much money they lose. What they don't know is how to fix that part necessarily.
Mhm.
And
Yep.
here's the worst thing you can do as an employer, I think. You tell all your employees, hey, you got this great financial wellness package, but you don't make them financially well. You don't give them the
Mhm.
tools and the help they need to feel it. All you're doing then is lip service. And then it's
Right.
even worse. We gave you a financial wellness package. What do you want from us?
Mhm.
I want to be financially well. I want to feel like my company cares about me. I want to not worry if I have to buy a car that I don't have any way to forecast that, right?
Right.
So, I mean, I want to feel like when I go to work, I get more than a paycheck. And because of that, I'm willing to give more than the typical employee who just goes to work and gets a paycheck, puts their hours in.
Yeah, that
Um,
is so true because a lot of people just feel like a number, you know?
why wouldn't you? There's
Mhm.
a local grocery store that has a big sign up that says employee owned. And I remember when that happened, right? So that store, you get really good service in it because it is in fact employee owned, right? So
Mhm.
those things matter, and especially large corporations which have the label of being, insensitive or not caring about their
Mhm.
employees, where you
Yeah.
are just a number, right? Well, numbers matter, but they matter when you're helping people with their finances. So when I'm talking about a really great financial wellness package, of course I'm talking about something like we're working with Hug Your Money because obviously we're patented for a reason. We do help people with budgeting. It's an automated system where they can plug their information in, but then there's a coach to help them, right?
Mhm.
We do help them with debt management. And if you've never heard me talk about the debt management side of this, it isn't here's a consolidation loan or here's a negotiated rate with your credit card companies. It's everything, anything that could be paid in full. I don't care if you owe your brother-in-law, the IRS, your mortgage, your credit cards, your car loans, anything that can be paid in full can be accelerated using our system without increasing your monthly outlay. And that's key because now an employer can say, look, if you take advantage of this program, have a meeting with the coach, group meeting, whatever, and look at your numbers, you're going to save 8, 10, 12, 20 years off your mortgage and
And
all
it's
your
great
other
because
stuff.
if you like instant gratification, because as soon as you see that number way smaller than what it was, you
Yeah.
get a little hit of that.
Yeah, and think about it as an employer. So when people fill out their form at the website and they click submit, they see that number right away. And most often they don't even believe it, but it is accurate. I mean, you can proof it out in the math, right? It'll say, look, you're scheduled to pay back your debt in the next 25 years, and we can help you pay it off in, let's say, 10. So we're going to save you 15 years of payments, and that amount of money is X, right? And of this $300,000 we're saving you, 175,000 of it is interest, right? We break it right down so you can see it. You can proof the math out yourself. Now, if you're an employer and you can get employees as a group to that place in less than an hour's time, they then see, oh my gosh, the value in being employed by this company where I have this as a benefit, which hopefully
Right.
the company is paying for, is like I just got a $300,000 raise over the next 10 years.
Yeah.
And by the way, now that I'm out of debt 10 years from now, and they've helped me with my budget and my retirement planning, and they've worked with my, put my 401k in with all the rest of my investments, and I can see what my forecasted retirement looks like. Now, at the end of 10 years, when I'm out of debt, or 8 years, or whatever the timeline is, some people are even shorter, 3, 4 years, all of my money that I was sending to creditors can go into this retirement plan. It's just an enormous idea that I think if employers understood it better, and it's not up to the employers to go figure it out, right? Companies should be able to produce this, but they can't, they don't, right? It's part of why we have the product we have. So they may be producing part of it, but not what I think is the most important part, which is the actual implementing of the wellness program. What good does it do to look up your illness on the web and say, oh, I've identified what I have this, and I need that prescription, if you can't get that prescription?
Right.
You need the doctor in the middle. You need a person who knows how to do this. And today we can do it all very easily through group meetings in virtual. I mean, I have a throat thing today and I'm in a meeting with you and you're in Northampton and I'm in Turners Falls, Massachusetts, right? So
Yeah.
it's easy to do this with group meetings today for employers and employees. And it's very warmly received when the employees understand this is incredible. I never had access to these tools or a coach like this ever before. And now I can see my company's doing it for me because they actually care about me. And of
And
course,
good managers know that that's the kind of stuff that breeds loyalty. When you're actually looking out for them, people will want to stay and work harder and do more.
there's no doubt. I mean, we were talking about young people coming into work, and millennials are saddled with this student loan debt. So are people in pretty much every generation these days. But they've got the student loan debt, and they're walking around saying, "I want to work for less money because I'm hoping my loans are going to get forgiven, and if I make too much money, they won't get forgiven, and I'm not sure if that's going to happen." The stress they're under is unbelievable. Or they say, "I need to make a lot of money because I have these student loans, and yeah, they're in deferment right now, but they're coming home to roost in 6 months or a year, and I'm going to have to pay that. How am I going to do that?" Well,
Right.
a debt program that's part of a financial wellness package that does what we do with student loans, which almost nobody does, right? Well, I could say nobody, but I mean, just because we have a patent doesn't mean there's not somebody out there doing what we do, but we haven't found them yet. And that's a way for them to feel more comfortable. The rising healthcare costs are squeezing employers all the time. Employers are paying less and less of the healthcare benefit, and you're having to pay more and more out of your paycheck. How about financial wellness that talks about that? How about talking about the aging population that is, maybe going into a facility, or you want to keep out of a facility? How can you afford to do that? As long
Right.
as we're keeping people um, under our thumbs with too many loans and high debt to income ratios and no skills about budgeting or real retirement planning other than what the financial person tells them, as long as we're telling people what to do and we're not teaching people what to do, this
Right.
problem won't get better. It's
For
about
sure.
education. It's about education. And employers are in a great position to make this happen. So, even if you're an employee, this is a perfect time to say, give us a call and say, hey, my employer doesn't offer that. Here's who I think you should talk to. And we'll
Yeah.
talk to them and hopefully make that work, and everybody benefits from that. Yeah.
And I think even this conversation will prompt probably a lot of people to go ask, do we even have one? What do we have here? Do you offer anything? Because maybe your employer does and you had no idea.
Yeah, that's where it's difficult for me to come on the air and talk about this because yes, I like to bring this stuff to light. But if you go to your employer and say, "Do we have a financial wellness package?" and they say, "Oh yeah, yeah, here it is." Then you need to see if it's really providing you with everything you need to be financially well, or is it a suite of pieces of software that you get to try to use, or is
On
it
your own and
yeah,
you're
or
never
is
going to
it
use. Yeah.
yeah, or is it a connection hiding under the guise of financial wellness that is really, here's our 401k person who comes in and talks to you about whether you need life insurance. You know,
Yeah.
in order for financial wellness to be financial wellness, it needs to be all encompassing. It needs to start with some sort of a budget or a handle on expenses. And these
Mhm.
things can be done simultaneously, right? It needs to include your real debt picture, not just your credit cards, your student loans, your car loans, and what will happen in the future, your mortgage, your home equity line. It needs to include that. That's a lot of money going out every month, and people just ignore it like it didn't matter. I don't get it. And of course, it needs to include savings, retirement planning, savings for emergency cash reserves, future goals, whether you're going to help support your kids or not, whether they're going to help support you. What are you doing for estate planning? Do you need a trust? Do you need a will? How can you get around things? That is about financial wellness. It is a broad area.
Plus your
So
software has a place too for the fun stuff, right?
the fun stuff, yeah.
Well, we talked before about how you like to plan for a vacation, not what if,
Oh
but
yeah,
like
yeah, yeah.
when. Yeah,
Well,
yeah, yeah.
the
That
fun
I
stuff is
like vacation stuff. Yeah.
the fun stuff is the part of being well that you enjoy. You
Mhm.
enjoy your health, right? You enjoy your financial health. Yes, you do a little work to get there, right? You get your butt on a treadmill or whatever. You do that part to get there. And nobody loves that part, but you do it when you see positive results. And the
Mhm.
positive results are they pop their head up early, anywhere between an hour and a month and a half. And bingo, you start to see, oh, I get it. This is what I can do. So you bet. In fact, I got a text the other day from these people in Florida, again, saying we couldn't have done it without you. Here's we've paid everything off except our mortgage, and we're throwing
Oh,
16 bucks extra a month at it, and we're saving this money on the side, and life is good, and we're never going back. We're never going back to the old way of doing things. And it's just, I got the
I
chills.
love that. Yeah. Yeah.
We get these all the time where people
Yeah.
are saying, wow, I can't believe I'm down to just this debt, or I can't believe I was able to retire. I can't believe that now I have enough money coming in that I can actually put money aside for a vacation fund. Or I bought a
Well, that's
car and paid it off in 3 years, or
that's a great feeling.
very rewarding. Yeah.
Well, if there's an employer listening today or an employee that wants to check in on this, but I'm thinking really for employers, like if you're listening to this thinking this sounds really good, what's the number they can get a hold of you at?
Sure. They can reach us at 413-773-3333, or of course on the web at hugyourmoney.com.
Thank you so much. This was fun, actually. I didn't know about this at all, so it was a fun day today.
I'll be talking to your employer. We'll see if we can make this more fun, more fun for you.
We'll have another episode of Financial Fitness with the Money Doctor, Dr. Francis Ram, coming up next week right here on WHMP.
Would you like to see your business on Financial Fitness with the Money Doctor? We offer a 15-year proven track record. We have limited openings, but are currently seeking sponsors and guests. Is your business a good fit? We'd like to start a conversation. Contact us today at 413-773-3333 or info@hugyourmoney.com.